Argentina's new president, Javier Milei, wants to dollarize the economy by replacing the local currency with the US dollar. As Argentina deals with extreme inflation, limited currency reserves, and a crazy amount of debt they may never be able to pay off, Milei's entire campaign focused on changing the status quo. Things like cutting government expenses, abolishing Argentina's central bank, and yes, replacing the Argentine peso for the US dollar. So in this video, let's explore how long this process could take by looking at two other countries who have successfully dollarized their economies, if the strategies that work for them can work for Argentina, and if dollarizing will actually fix Argentina's economy or not. But before we get into all that, we need to understand why countries flock to the dollar at times of economic emergencies. For the last 100 or so years, the dollar has been the world's reserve currency, and with that privilege comes three critical superpowers. The first is stability. Stability makes it much easier for international trade. Just like when you communicate with someone, you need a common language. But in this case, a common currency is needed that everyone can agree on and knows the value of the currency is reliable. So when things get tough financially around the world, investors run back to the dollar knowing that they can rely on it due to its world reserve currency status. And if we use this example in relation to what's happening in Argentina, you'll see just how important this is. The current exchange rate is around 360 Argentine pesos for $1 US. But there is a black market in Argentina for the dollar, and those exchange rates are now over 1,000 pesos for every dollar. That's because the government put a limit on how many dollars can be exchanged for the peso, totaling $200 per month. Because of the instability of the currency and, quite frankly, the economy, Argentine citizens are starving for the dollar, which is why the black market is helping to serve that demand, but more on that later on in the video. The second superpower of the world reserve currency is its exclusivity to buy oil. At the end of World War II, countries around the world, large and small, met in the United States where it was agreed the dollar would be tied to gold, which essentially tied all currencies around the world to the dollar. The dollar remained a powerhouse until the early 1970s when the United States ran out of money and was no longer able to continue their arrangements of dollars for gold. So the United States made a deal with Saudi Arabia where the dollar would be the only allowable currency to buy oil in, making it a necessity for the world to hold the dollar. And this was the birth of what we know today as the petrodollar. The third superpower of the world reserve currency is its country becomes an investing juggernaut. Because of the first two superpowers, countries around the world have to hold dollars for international trade and oil transactions, and right now this is called the dollar wallet. But countries don't use all the money in their dollar wallet, so instead of just having it sit there, losing purchasing power to inflation over time, the next best thing is to use a large portion of those funds to invest in US markets. And because of these three superpowers, the dollar becomes very attractive for foreign investors, which transitions nicely to talk about the first country who has already gone through a dollarization process themselves. We'll start with El Salvador, who didn't dollarize out of economic desperation, but instead at an attempt of economic advantage. From 1993 through 2000, El Salvador operated under a pegged exchange rate with their domestic currency, the colon, trading at a rate of 8.75 colones for every $1 US. On January 1st, 2001, the dollar became El Salvador's legal tender, so all wages, prices, financial accounts, and transactions were converted to the dollar, and all colones were removed from circulation over the next couple of years. In order for this to happen, you need general support and a buy-in from the citizens and, oh yeah, lots of dollars. So how did El Salvador, a small, densely populated country, pull this off? One way to get dollars is by having a positive trade deficit, which basically means you're selling more of your stuff to foreigners than you're buying in return. It's like how you or I will have more cash on hand if we make more money than we spend. But if we look at this chart, El Salvador has had a negative trade surplus for the last 30 years, and it became significantly negative during the global pandemic. A negative trade deficit isn't really a big issue for larger countries, but it does become an issue when you don't control your own currency. And obviously, El Salvador isn't allowed to print the dollar. So as the country continues to have a negative trade deficit, inevitably they're just going to run out of money. However, this hasn't happened, and money supply within the country has actually been going up since the country dollarized itself. The country has one of the largest foreign workforces in the world. Every month, hundreds of millions of dollars are sent back to El Salvadorian families from El Salvador workers working in other countries like the United States, which is very convenient because they get paid in dollars. And these transactions have likely kept the economy afloat. Reuters reported that over 2.5 million Salvadorians live abroad, mostly in the United States, and in 2020 they sent back almost $6 billion, equivalent to 23% of the country's GDP. This strategy took about 24 months to get enough buy-in from the people and, of course, enough dollars flowing into the system. So is this a strategy that Argentina will be able to pull off? It's a scenario that we dive much deeper in later on in the video, because the next country we need to talk about, Ecuador, was actually in a similar situation that Argentina is in today, because they needed to dollarize their economy out of sheer desperation. In March of 2000, the dollar was signed into law as the legal tender in Ecuador, which was the end result of a deep recession, currency collapse, and a failing banking system. If this sounds familiar, that's because it is. Argentina currently has a poverty rate of 40% and inflation has reached 140%, which means over the last year, stuff has become over twice as expensive. In the late 1980s and the early 1990s, many Latin American countries like Ecuador were troubled with a lingering debt crisis. Many loan defaults and economic challenges in the region led to what is known as the Brady Plan, named after the US Treasury Secretary at the time, Nicholas Brady. Basically, the plan called for the United States and lending agencies like the International Monetary Fund and the World Bank to help restructure and reduce the debt of these countries. The process culminated with what was called Brady bonds, which provided a way for commercial banks to manage and mitigate the risk associated with defaulted loans from developing countries. The banks could exchange their non-performing loans for tradable bonds, therefore improving the quality of their assets and reducing the impact of defaults on their financial health. In a way, it was a get-out-of-jail-free card, and Ecuador, a decade later in 1999, decided to default on this new restructuring deal totaling $98 million, which essentially removed Ecuador from the foreign financial services. Obviously, this caused dramatic social and political issues, which led to the sitting president being removed from office in January of 2000, which of course led to even higher inflation and more economic instability. Finally, a couple months later, they waved the white flag and accepted dollarization as an option. In exchange, the US government agreed to release its obligations, allowing the conversion to the dollar. Ecuador's banks started to receive dollars directly from the US Treasury, which led to billions of dollars worth of deposits, and this process of converting the local currency to the dollar took around 9 months. But did it help? The answer has to be an emphatic yes. Let's look at the chart from the last 40 years, where the blue line represents inflation and the red line represents GDP growth. We can see exactly where dollarization began, and inflation dropped significantly to normalized levels over the last 2 decades. Is this emergency process a more realistic option for Argentina? Before we get into that, I make videos about world news impacting the dollar, so if you like topics like this and want to see more of them, make sure to subscribe to the channel. Argentina's new president, Javier Milei, has his hands full with the economy he just inherited. Extreme poverty, intense inflation, and limited assets at his disposal. Nonetheless, he seems very confident he'll be able to turn it around by dollarizing the economy and abolishing the central bank. Comparing the El Salvador and Ecuador examples we talked about earlier, what would Milei need to make this happen, and is this realistic for Argentina? To dollarize, Argentina needs to replace the peso with the equivalent in US dollars at or slightly above the free market exchange rate, which, as we talked about earlier, could be anywhere from 360 to 1,000 pesos for every $1. But there's one problem. Argentina doesn't have enough dollars. Well, at least Argentina's government, that is. As for its citizens, at the end of 2022, Argentines held over 246 billion in foreign bank accounts, safe deposit boxes, or other undeclared cash. This was according to Argentina's National Institute of Statistics and Census. This amounts to over 50% of Argentina's GDP in current dollars for 2021, which was 487 billion. So the dollar scarcity issue only applies to the Argentine state. And if you remember the El Salvador situation, their citizens sent back around 6 billion in 2020, which was about 25% of their GDP. For Argentina, some economists suggest they would need around 40 billion in dollars to dollarize. So with a fair exchange rate and a buy-in from Argentinians to use the dollar, the scarcity of dollar reserves might not actually be a problem for Argentina, but again, it does have to go pretty perfectly to work out. In the days following his presidential win, Milei and his team already went to the United States to discuss foreign policy, his economic agenda, and probably the $40 billion IMF loan. Adopting the dollar will separate fiscal policy from monetary policy, which will no longer respond to domestic political pressures, a problem that has plagued Argentina for decades. The one thing not in Milei's favor, however, are the policymakers back home, as he will likely not have the political backing to be able to push through such dramatic economic changes. There is way more to this story though, as Milei has already said that he doesn't plan on working with China or Brazil, currently Argentina's top two trade partners. So to find out why and how this could have an impact on Argentina's economy going forward, make sure to check out this video here.